Let's get technical with Laurence Balanco of CLSA in Sydney. Laurence, since hitting its low back in March, the MSCI Asia-Pac index is up almost 80%, but it's down 6% in the past 2 weeks. Put the loss in perspective for us. How do you read it?
Yeah, morning. Basically, what we've seen over the past week and a half is a sort of creating reversal patterns. And if you're looking at the TAIEX, for example, you've seen the biggest week reversal since August. So it's really a warning sign that we've seen the potential of this trend finally coming to an end. The other thing to note is that looking at the daily charts, the new highs that we saw in early January weren't confirmed by momentum. That sign of bearish divergence typically leads to some kind of reversal. So we're on high alert here for further declines coming through on markets. The key level for US markets last night that held again was 1080. So that's a key short-term support level we're watching on the US markets.
However, in terms of volatility, markets facing lots of uncertainties, tightening concerns in China, speculation central banks will raise rates, volatility to be expected for at least in the short term?
Yes, correct. I think this is really just a part of a topping out phase. So we expect to see a lot of back and forth price action, a lot of whipsawed price action as investors sort of get sucked in on the downside, and then we see a spark reversal. So we think that'll continue for at least the next 2 months. We should see distribution patterns continuing to develop, and that'll set up much more vulnerability towards the end of the second quarter for the declines.
How does recovery look? When will it set in? Some saying it will take longer than expected.
Well, we've just really seen the beginning phases of a topping pattern. So I think looking at the price action going forward here, we could see markets in a whipsaw motion for the next month to 2 months that culminates in some kind of a panic decline at the end of the first or middle of the second quarter. So I think just seeing a 6% decline doesn't mark the end of it. It's more than likely just the beginning of a topping out pattern.
Right. So, Laurence, what should investors be doing now? Even with the reversal in trend that you're talking about, it's not really a time to take short positions, correct?
Well, no, we're looking at, if there's really time frames you've got to look at here. In the very short term, you've dropped down to very oversold levels in a short space of time. So looking at shorting opportunities or selling opportunities, I think investors should look at the rebound that should take place over the next 10 trading days or so, and that'll create far better selling opportunities to get short or get more defensive for this topping out process.
Earlier, you talked about the TAIEX. Let's take a look at the Kospi. It's down more than 2%, but people we talk to are pretty optimistic about prospects. If you take a look at the eco data, that seems to support their view. What key levels should we be tracking?
Yeah, so if you look at the Kospi, you've really got a double top pattern that's developed there. The key support area comes down at the 1510, 1520 area. We think we can trade down to there before we see any kind of attempt to rally back on that Kospi index. So 1510 to 1520 is a key support level, and that's probably where we see this market drift back to before seeing a reasonable recovery rally.
And if it breaks below that, it may trigger a double top pattern. That's what you're anticipating.
Correct. If we break below 1510, that's an extremely bearish event. It'll leave a double top pattern on the weekly charts, the daily charts, with that momentum divergence as we spoke. And that could see the Kospi fall as low as the 1370, 1350 area. So 1510 is a very key technical level.
And as far as the Hang Seng is concerned, you see potential for short-term rebound trades for the Hang Seng China Enterprise Index, as well as the HSI?
Correct. If you look at both those indices, those are the first indices in the region to get back to their 200-day moving averages. So we see some kind of short-term support levels there. Markets are again extremely oversold. So looking at that 10-day rally, as I say, on the shorter-term side, that's potentially where we see the biggest bounce from these oversold levels before the broader topping pattern continues to develop.
I want to pick up on what you talked about earlier about the U.S. market. You're saying as well, a decline below 1,070 for the S&P, that would be dangerously bearish, a mark that we should be looking out for.
Correct. That'll confirm that the rally that we've seen off the March 2009 lows has topped out. So 1070 to 1080 is the key support level that we're watching there. If we break below that, we can see the S&P correct back to the 1,000 level quite easily, or potentially sub 1,000 during this correction then.
All right. Laurence Balanco, thank you so much for your analysis here on The Trade today.